Well, on the heels of the strong stock market last year, 2014 is on pace to be the busiest year since the dot-com bubble for initial public offerings. In today's U.S. Bank and Economic 360, Mike Denneman, Vice President and Senior Portfolio Manager for U.S. Bank, joins Business Watch producer Kelly Leon in the studio to talk about what is driving the surge and what it tells us about the market.
Thanks, Peg. Thanks, Mike, for being here.
Good morning.
We've been hearing a lot in the last few months about this recent wave of IPOs. Give us some background on that.
Sure. So it is certainly drawing a lot of attention. And just to kind of set the stage, an IPO, or initial public offering, is when a private company first sells shares of its business on a public exchange. So essentially taking it from a small group of owners, its founders, its initial investors, and then making ownership available to anybody. And so with the stock market being so strong, we're seeing this wave because, think about it, if you're a business owner, you're not going to be too eager to sell your business to the public when the market's lousy. You want to do it when you can maximize value.
Right.
So with the market now at these record values, we see a lot of ownership interests looking to cash out.
So it's kind of like the dot-com bubble.
There are certainly a lot of parallels that we can draw there. I think the easiest parallel is certainly the sheer volume. We had more than 60 in the first quarter, which puts us on pace to have the busiest year since the dot-com bubble burst. And certainly many of these companies coming to market are technologies. We see names like Grubhub and King Digital, which makes the Candy Crush game.
Oh, gosh.
But there are a lot of more established brands as well. La Quinta Hotels, for instance, just came to market. And in fact, we're seeing that these companies are more established than in the past. The average age for a company coming to market this year is 13 years. So these aren't your stereotypical overnight startup type companies. But at the same time, many of them have yet to turn a profit. So fully 2/3 of these companies coming to market are not yet profitable. And that's a little concerning because that's a level equivalent to what we saw at the height of the dot-com bubble.
So give us some advice. What does this tell us about the market? What should we do?
It depends on who you ask.
Okay.
There are some market observers who say that this is very good for the market, that it's a sign the market's healthy, that the market's growing. In fact, we've seen that many of the companies coming to market this year, have jumped on average by about 20% on their first day. So that's a sign that there's certainly demand out there. But then there are analysts who are also being very cautionary, saying that this is a worrisome sign, that it's the classic example of a market top. And we've been down this road before, and we've seen how it ends. So it's too soon to decide who's right on that count, but I think we can certainly expect to see a lot more IPOs in the coming months.
Well, fortunately, we have U.S. Bank to keep us informed and up to date. Thanks so much, Mike. We appreciate you and U.S. Bank.
Thanks, Kelly.
Peg, back to you.
All right, thanks, Kelly and Mike.